Good afternoon. Welcome to GBC World TV. This is episode 3 of GBC World TV, where we'll be covering tax reform. I am your host, Dr. Gino Bradley of GBC Worldwide Financial. You can always check us out at our YouTube channel. Look up GBC World TV on YouTube, or you can go to our website, www.gbcworld.net. So let's jump right in. So, tax reform. Let's see if we can't make some sense out of this. And by the end of this episode, have every person that views it feeling a little bit better about what they know about the tax reform bill. Of course, there's going to be tons of people that has mixed feelings. One group says the bill is great. The other group says, I hate it. We shouldn't have done it. Either way, it's going to affect everybody somehow. So let's talk about how it's going to affect you. Now, generally speaking, most American households will not be affected at all. You're going to change one group of money where they were taxing you too much for another area where they're going to stop, where they're not going to tax you at all anymore. So you're going to be trading one thing for another. Now, the other general theme between the lines on this tax bill is that now we are looking at, it used to be about 44%. Let me get my statistics right. Used to be about 44% of American households paid absolutely no tax. They paid zero tax, which means whatever they paid in taxes, they received a full refund of that entire amount plus a whole lot more. So it's no wonder that we're in a deficit. If you paid $2,000 in taxes throughout the year, all your paycheck, and you get an $8,000 refund, that money's got to come from somewhere, right? Well, it comes from people who don't get a refund. So it's what the Republicans will refer to as a transfer of wealth or a redistribution of wealth, which is why they, dislike the way the tax system is set up so much, because there are 50% of Americans are receiving more tax back at the end of the year than they paid in, which is means it's got to come from somewhere. And it comes from the other 50% of people who are either getting no tax refund back or they're getting back less than they paid. So let's go ahead and kick off some more details. We've gone from 44% of people in America paying zero to 47%. And that kind of seems like a pretty good thing if it's able to balance out and the government can actually pay for it. Because I believe in taking care of families, and I'm okay with paying a little bit of extra tax and paying a little more if it helps the other American families that need it. Neither Democrat nor Republican. I'm just a man. I believe in God, not governments. So I'm not going to push my spiritual belief off on you, but I believe that when it's all said and done, God will level the playing field. So let's talk about some more items here that are going to change the way you do business with taxes. Always remember, you can always get a tax professional. Same place you can see our TV episodes at the website, www.gbcworld.net. You can also get in touch with us if you want to have a one-on-one session, and we'll go through these things and how they affect you one-on-one. You can feel free to call or text 404-358-0718. All right, we covered from 44 to 47%. Let's talk about another tidbit. The child tax credit has gone up and it doubled. It went from $1,000 to $2,000. You probably heard that already, and you probably heard some of these things. So let's talk a little bit more about how it affects regular people. Some people said it went up to $1,400 instead of $1,000. Some people says it went up to $2,000. Which one was it? Well, it actually went up to $2,000. It doubled. But the refundable portion of the credit is $1,400. So we'll talk a little bit more about the child tax credit in a little bit. There's no alternative minimum tax, which was a way to make sure that certain people paid at least some tax. The alternative minimum tax was almost like a catch-all or safety net. So if you had a very savvy accountant like GBC Worldwide Financial, GBC Tax Service, to write off all of these special items for you so that you paid absolutely no tax, then what they did was they would put a special safety net in there to make sure that at least you paid something. Well, that's gone now. kind of make you wonder. I'm not here to tell you what to believe, but think about who you think that benefits. Okay? All right. Now, you used to be able to, through the itemized deduction process, take a look at one of our previous episodes where we went through itemized deductions versus standard deductions. A brief recap is on the itemized deduction side, instead of us taking our income and taking it all down by the same amount, depending on our filing status, all the single people get to bring their income down by this much. All the head of household people get to bring their income down by this much. All the married people get to bring their income down by this much. So the government's going to give you a standard amount to deduct from your income. So instead of you paying taxes here, you pay taxes there at that place at that standard deduction amount. So we're going to take that amount out of your income and not tax you on the whole thing. If you made $50,000, your standard deduction was $10,000. We're only going to actually tax you at the $40,000 rate. So when you do itemized deductions, what you're saying is we don't want that standard government deduction. I want to write off everything that I can find because I believe I can do better than the standard. There's some very savvy taxpayers out there because they have good advice and good accountants that can come up with $20,000 or $30,000 or $40,000 of itemized deductions. So if you start off with that $50,000 mark, instead of bringing it down to $40,000 and taxing you there, they continue to write off more and more and more, so their income comes down. They truly made the $50,000, but they write off their income, and now they're only going to pay tax on about $10,000 or $15,000. That's how the itemized deductions work. Well, some of those itemized deductions are going to be limited now because of the new law. You used to be able to write off a lot more than you can now. But it looks like the federal government always used to give you the opportunity while you were writing off your itemized deductions, you could write off your state, local, and your property taxes up to a much higher amount. And that amount now has been capped at $10,000. So you got to think about who that affects. If you've taken that much money out of your check for state taxes, or your local property taxes are very high because of the state or the county you live in. If you live in an affluent area with a nice zip code, then this may affect you because your property taxes may be very high or your state taxes may be very high. Unlike the people that live in Florida, for example, that doesn't pay any state tax at all. So you cannot just continue to itemize that number on and on and on. It caps at $10,000. The estate tax amount that you can exempt yourself from has doubled. We got to make sure that we're ready for the wealth transfer from generation to generation. Most people are not going to be worried about the estate tax because they don't have anything. They don't have anything to leave to the next generation. They could barely cover today. A lot of families are hurting out there, and they're not really concerned about things like the estate tax. But I'm very concerned about it because I am concerned about my estate plan and going from generation to generation, leaving wealth in perpetuity, which means forever for my posterity. My daughter will receive wealth and her children will receive wealth and on and on and on because of the plans that we do today. We have to at some point stop these families and these children from starting over from scratch. Everybody starts over from zero because there's nothing to leave the next generation. Well, the buck stops here. We're not doing that. Not in my family. If that is something that works for your family, then that's fine. You probably don't have to worry about the estate tax because, All right. That's neither here nor there. Obamacare was attacked, of course. Obamacare was scratched out. And the reason why is because once you remove the mandate, then you effectively have canceled Obamacare, period. Now, if Obamacare has the program set aside so that we can help tons of Americans, but then you remove the mandate, you also start to remove the funding. Now there's no funding, there's no requirement. Obamacare is effectively dead. However, the president has not signed that bill just yet. We'll talk more about that in just a minute. All right, some other itemized deductions that stayed in place and were not affected. Graduate students that receive tuition waivers. You can continue to write that off as an itemized deduction. Medical expenses, that has changed slightly, but you can still write that off as an itemized deductions. Student loan interest, you can continue to write that off. Now, another major change, corporate taxes going from 35% down to 20%. A lot of you probably watching this video saying, how does that affect me? What does that have to do with me and my family? Well, the theory is if you lower taxes for the businesses will hire more people. The businesses will pay better wages to the people. The businesses will stop sending factories and jobs and wealth overseas and bring it back to America. Whether or not you believe that's true, that's up to you. I'm not here to tell you what to believe. They cut it from 35 to 20%. However, there's some companies that's already talking about paying bonuses to their workers already and trying to get the bonuses to those workers by Christmas. It's probably not going to happen, being that the president hasn't signed the bill yet. Remember, we're going to come back to that. So this bill is set and it has been agreed on by the Senate and by the House. But until the president signs the bill, it cannot be executed into law. We'll talk about why he's doing that in just a little while. Okay. All right, the mileage deduction has gone up to 54.5 cents for business mileage, medical mileage. Maybe some of you may or may not have known that you can write off as an itemized deduction 18 cents per mile for any medical mileage that you have to travel in the purpose of managing your health care. Charitable miles. Maybe you didn't know as well that you could also write off the mileage that you have to drive for charitable contributions or for in support of your local or favorite nonprofit. Okay, we already talked about the child tax credit. We go ahead and scratch that. We're moving right along. Thank you for watching again. Just want to remind you, you can always find more information about who we are and what we're doing at www.gbcworld.net. Okay, more tax law changes. Now, of course, you have your Republican benefits and your Democratic benefits and everybody having different sides on how they feel about this thing. But let's talk about why some of the opponents would say that it's not good. Well, if you take a look at it, only 5% of the people in America actually got a tax increase. And I know that sounds bad. I thought this was supposed to be a tax cut. Well, the top 5% of people in America, the top 5% of the wealthiest people in America, they received a tax increase. However, they will probably not pay the taxes because they hire very good accountants like our company to take care of that problem for them. So that's probably more of a show than anything. All right. You will probably not feel any of these tax law changes until you start receiving your paycheck in the year 2018. Why? Because the president didn't sign the law and sign it into law yet. So here's the deal. If the president signs it into law right now, it effectively defunds a good chunk of the Medicare budget, which means Medicare and Medicaid immediately starts to tank. And all of the elderly people, the Social Security people, all of these people that are depending on Medicare and Medicaid immediately go into the point of not having the funds to even properly manage the system because it immediately kicks into effect. So he has to wait until at least January. He'll probably sign the bill January 3rd. That's what's expected. If he signs it January 3rd, 2018, which is a few weeks from now, it won't kick in to a year later, which means the entire year of 2018, you may or may not see that change yet. You may change your withholding because you know that the law is changing, so that the end of the year, in the year 2019, you'll be filing the tax return for the tax year 2018. So a lot more to come on the changes. So just remember, seek out a tax professional and don't go at this thing alone if you think you may need a little bit of assistance. There's some things that you shouldn't try at home. You could change your own oil, but you don't. So hire a tax professional to take care of your tax situation. You could change your own tires. You could buy a new tire, put it on the rim on your car, but you don't. So hire a tax professional. All right. So some of the other opponents of the bill says that because it's not going to kick into 2018, 2019, that it's actually too slow, which means regular, normal American people won't actually feel it in their paychecks or in their pockets for probably a year, which means America doesn't start to reap any kind of benefit for about a year. Now, why is that important? First of all, the amount of money that most average American people are going to see in addition in their own wallets and paychecks because of this is pretty small. The majority of these tax benefits went to the wealthy. So here's a very basic illustration for you. This is the amount of increased income in American households for the average American. And this is how much additional income wealthy Americans will have because of the new tax bill. You see the difference? So there's not very much to be proud of. It's nothing to write home about. But we won't even see the benefits very soon. So the little bit that you are going to save, it won't be much to write home about. So this helps the rich more than it does anyone else. However, does it actually help average Americans? Yes or no? That's the main question. Does it actually help? Will the average American actually see more money in their paycheck, in their wallet because of this new tax law? And the complicated answer is yes. You will see more money in your paychecks. How much money? This much money. So, hey, I'm loving the progress. We got to make some kind of progress, but you got to think. Every group has their own agenda and they have their own thing that they're trying to push. And this is going to cause the families in regular American families and households to make a change. We're not starting enough corporations. We're not writing enough books. It's not enough of us going to college and writing off different things and getting education credits. There's not enough of us becoming doctors. So we have to rely on doctors and dentists to come from overseas. When I was in graduate school, I was in a classroom full of foreigners. Nothing wrong with that because we love everybody around the world. I'm a, kind and fair individual. However, what I'm noticing is that while you're letting some people give you a hard time about going to school, somebody, they say that, all the people on the block want to be too cool. Like, hey, man, what you doing going to school? You going to school again? Man, you getting another degree? What kind of business you doing now? What you doing, man? Don't let the naysayers and the average weak-minded people that have no kind of get up and go for themselves talk you and your family into not bettering yourself, because we haven't accomplished enough in our community to sit down yet. We haven't accomplished enough in our community to stop going to school yet. We don't have enough degrees to stop going to school. We don't have enough books written by our own people to stop writing books yet. And that's what you tell them when they ask you, what you going to school again for? That's what you tell them. So stick to your guns, take care of your families, but we got to get more savvy. We have to become more savvy, more business savvy, more medical savvy. And we have to make sure that we utilize all of the benefits and all of the resources that we can find, because knowledge is power. Okay, never let anybody stop you from trying to move forward, to accomplish more, to produce, to grow, and to jump. Okay, we haven't done enough yet to take any breaks. So that's why we're trying to do something else. Some of the people that'll put you down, they've already accomplished theirs. They've already got theirs. And now they're telling you to sit down somewhere because they want you to stay right where you are so that they can capitalize on you, so that they can use you, so that you can be at the bottom because somebody got to do the lower level jobs. Well, I'm a firm believer that it's fine to do whatever level job you're doing, as long as you're happy and passionate about what you're doing. But I do not believe, and I do not agree, I'm completely against being weak and average. Don't be weak and plain because of fear. Jump. So let's look at what else is going to happen. Okay. Told you that the top rate in America, the top 5% of people have actually took the tax system backwards. The Republicans claimed that they were going to do all these tax cuts. We're going to cut it. We're going to cut it. We're going to cut it. Well, I guess kind of one of the things that your average person wanted to see was let the wealthy pay a higher share. People like Warren Buffett, there's a lot of great wealthy guys that were saying, look, we're willing to pay more because we're better off. Their tax rate has gone from 37% to 39.6%, which is good. That's pretty good. They didn't pay but an additional 2.6%, but they are so wealthy. That top 5% of Americans, they are so wealthy that will really actually take up a chunk of what it costs to fund all of the additional benefits that are going to the other Americans that are going to be receiving additional benefits, like the child tax credit that is going up. That is funded pretty much by the top rate going up. Now, what does this do to the American government? How are we going to be able to operate? Well, it's going to add $1.46 trillion to the deficit. The American deficit is going to go up. They gave Obama all kinds of hell about taking the deficit up. We had X amount of dollars in the deficit and Obama ran the deficit up. Well, it's going up again because you got to pay for this somewhere. And it's just not enough money in the budget. And the real thing that's going to hit us right now, stay tuned and stay connected. Stay connected to the website. Keep coming to our YouTube channel to check out the latest information. But the next fight that we're going to have is going to be a fight to fund the government because of all these changes and everything that's happening. They're going to have to come to an agreement to keep the government funded throughout the end of the year. This is the Democrats' opportunity to strike back and poke the Republicans in the eye. I'm not saying I agree with either one of them either way. I'm just saying watch out because it looks like the Republicans have a victory. And it's actually a little weird and it's actually a little creepy how much everybody compliments the president. And the Republican Party is complimenting him like he's a dictator. They're all afraid to disagree with him. If you're in an organization where you're afraid to disagree with your leader, you're afraid to have free thought, you're afraid to think for yourself, and you got to act like a parrot, you're in the wrong organization. Be a free thinker. Don't be weak and plain. Be yourself. You got to jump. This is the Stop Dreaming and Start Moving channel. The GBC World TV is all about stop dreaming and start moving. And that in respect to faith, business, politics, finance, education, family, all of it. Stop dreaming and start moving. You got to do something. And now all those Republicans who said they were going to have their people's back. I have my constituents back. We're going to go to Washington. We're going to change things. Now they're all up there singing like parrots. And all they're doing is saying whatever Donald Trump tells them to say. They're saying whatever Mitch McConnell tells them to say. They're saying whatever Paul Ryan tells them to say. And everybody's afraid to disagree or to have a free thought or an individual understanding of anything because everybody's afraid of the backlash. What happens if you think for yourself? Well, you already know what I believe about that. You're talking to the wrong one. So stay tuned to GBC World TV to learn more about free thinking. Stop dreaming, start moving. That's what we're doing. The deficit went up by $1.46 trillion. Now, this is, the Republicans are praising this guy and telling him he's done all this great stuff. And really, the last time something really great like this happened was 1986. And if you think about it, who did it help? It didn't help you. It didn't help me. It didn't help my family, my mother, my grandmother, anyone in my generations. It probably didn't help you either. When Ronald Reagan dropped the tax rate for the highest amount of American people, he dropped the tax rate from 70% all the way down to about 28% or so. I think he dropped it down from 70% about 28%. That was a huge tax cut. And the American tax system was very, very different back then. Now, supposedly, that makes more business, that makes more investment, and that makes life better for you and I because more businesses can do more investment and build more things, which hire more workers, and the workers buy more things at the restaurants, so then they can continue to cycle the money through the system. Not trying to tell you what you to believe, tell you what you should believe. I'm just giving you the facts. Only 30% of the people in America itemize their tax returns. So that's how you know a lot of times this may or may not truly affect you anyway. Most people will bring their church slip and say, hey, look, I put this money in church, or they'll bring you their money where they put money in the American Cancer Society, the Lupus Foundation, the Sickle Cell Foundation, St. Jude, and they're trying to come up with what they need to do the itemized deductions, but they just don't quite have enough. The standard deduction that the government, for as long as that's a bigger deduction and it benefits you more, we're always going to go with that one instead of coming up with the itemized deductions that you can come up with for yourself. But as your life changes and you get more professional, you buy a home, you go to school, you buy property, your itemized deductions will start to get higher and higher. And at GBC Worldwide, we teach our clients how to do that. So always remember, you can get information from us at www.gbcworld.net. Now, pass-through entities like LLCs, S-Corps, and partnerships, that group of business individuals, which fits with our own company, has seen some changes as well. But it looks like we skated by. Whew. I was hearing and doing a little bit of research, and it looks like they were about to hit the pass-through entities with a higher tax because of the type of businesses that we have. But it looks like when it's all said and done, we're going to end up right around the same place that we were. So we don't have to worry about any additional taxes, but we got to do some special things. If you have an LLC and you need it converted to an S Corp, give us a call. Go to the website, because you can't have a single member LLC or sole proprietorship continue to experience the benefits of business deductions, have that go on and on, because the tax laws are changing. Some of these things don't kick in to a certain point, and some of these other benefits, they're going to kick in and start working, but then they're going to expire after a certain point. Get your business in order. Give us a call and we'll take care of it. We can help you out with it. One thing that didn't change is still only 7 tax brackets. The tax brackets changed a little bit, but overall, still only 7. And it looks like they're doing some work on the exemptions. We're going to look more into this, but it looks like one of the goals of the Republican Party was to get rid of the exemptions. And the exemption was another great way that most American families would be able to reduce their income. So that instead of paying taxes up here, they can pay taxes down here. And really what they would typically do is you would get $3,800, $3,900, maybe $4,000 times however many people was in your home. So you might be able to say, well, it's 3 of us, so that's $4,000 times 3. That's $12,000 I can write off of my income as an exemption. That's not something that you have to qualify for. It's however many people on your tax return, you get to minus $4,000 for each one of those people. Now, we're not going to go too deep into it because we're going to handle this business for you. You just need to make sure you find an accountant you can trust, even if it's not us. Find a tax professional that you can trust. Now, the exemptions, it looks like we're supposed to go out so that they can just double the amount of the standard deduction. Now, what that means is there's no more benefit for having all these children. So you got one child, the benefit will just about be about the same as if you had 4, 5, 6 children. So you've had typically all these years, people that had 3, 4, 5, 6, 7, 8, 10 children getting back these $8, $9, $10, $12, $15,000 refunds. But at the same time, it's harder for that family to survive because they have more expenses related to those children. It takes a lot to help raise children. So that benefit that used to be there to help raise the children and help educate the children, it looks like they're tampering with that a little bit. And I'm definitely not liking what I'm seeing when it comes to the attack on the American family. How in the world can the top 5% see a little bit of an increase, but when it's all said and done, when they start doing the topsy-turvy shell game and they start switching things around, that same group that was supposed to pay a 5%, a little bit more in taxes, end up paying less taxes than your average worker that's working at Little Caesars or Taco Bell. Now, that's because they have great accountants. So you can have the same thing if you find the right accounting firm. We are definitely willing and ready to help you guys if you need it. We have locations all over the city of Atlanta, throughout the United States. There's 3 ways we can help you guys out. You can come into the office. You can reach us online at our website, or you can download our mobile app. Our mobile app is on Android and Apple in the App Store, the Apple App Store and the Android App Store. And you can just click on what state you're in and choose which preparer that you want to work with. So the app is called GBC Financial. All right, a few more tidbits before we wrap up. Looks like there's a new credit for parents. So if you have other dependents that are not children, like if you're claiming your parents, there's an additional $500 credit that's coming for parents. It appears also that because of the delay in this tax bill, because he's not signing it, we're about to start doing a new tax season. The 2017-2018 tax season is to cover tax year 2017, okay? Tax year 2017 will not be affected by any of this. So you don't have to worry about that. It's going to apply onto 2018 going forward. I told you that we would come back to medical expenses as an itemized deduction. It's still an itemized deduction, and it used to be that you could only write off the amount that's above 10%. Now the threshold has gone down to 7.5%, and I know that may sound a little confusing, but definitely give us a call so we can make sure that we take care of you. And all that simply means is For an itemized deduction threshold, it would be if you can write off the threshold at 7.5%, which is the new law. The old one was 10%. It means however much money you made until you get to the point where you spend 10% of your own money on medical expenses, you can't write it off. And once you get to that threshold, then everything that you spend from then on, you can write off. Well, only thing that's happened is the threshold has gone down. So now instead of having to get all the way to 10% before you can start writing off your income, now once you get to 7.5%, you can start writing off your income. So that's a benefit for most average American people. The Education 529 plans that we is similar to a 401k for children that's meant for college education planning. Got a lot more flexibility, so that's a good thing. It's a little bit more flexibility in what you can use the money for. And before it was really only, tuition and fees. Now it looks like you may be able to do a little bit more because it takes a lot more than just tuition and fees to get a child through college. We talked about the estate tax. We talked about Obamacare, which has been effectively gutted, which was is going to cause 13 million less American people to have health insurance because of that. I was perfectly fine with paying a little bit more and not worrying about how it affected my personal pocketbook, my own personal wallet, because I believe in helping people. However, let me tell you one of the good things about gutting the Obamacare mandate. It's not that gutting Obamacare was good, but gutting the mandate means this. There was a requirement for you to pay a $630 fine for every person in your house that did not have health insurance during the year because it's required by the Obamacare law. Well, they've thrown that out. Now, I know you're probably thinking to yourself, what are you talking about? We ain't paying no $630 fine. It's probably just because you cheated on your taxes, you told a lie, or maybe you had health insurance so it didn't affect you. But I can tell you right now, we do hundreds of tax returns here at GBC Worldwide, and we're very careful to make sure that we maximize every opportunity. And I can tell you right now for a fact, we had to take a lot of special precaution to help a lot of people because a high percentage of our clients last year did not have health insurance, which means they were technically subject and had to pay $630 per person as a fine for not having health insurance. But because God has definitely blessed us with some great techniques, some great methodologies, and some great research, and we were able to help every single one of our clients to keep from paying that fine. So we're thankful to that, but we give God all the glory and credit for that. We thank God for blessing us with the knowledge that we need and everything that we have. We thank God for giving us a great facility, for giving us multiple offices, for blessing us with a new website, a new mobile app. God is breathing on our business and doing a lot of great things. So I'm not going to try to take credit for what's happening. I definitely give all the praise, glory, and honor to God. So I told you before, we're a Christian-owned business, and we operate under Christian principles, and we're going to continue to do that. And we don't care who don't like it. We're not trying to get the business of people that don't believe in our principles. If you believe in another religion or you're an atheist and you don't want to work with GBC because we believe in God, we're a Christian-owned business with Christian-owned principles. We're a minority-owned business with minority principles. Then we don't want your business anyway. Now, we're not trying to be political. We're just being authentically and transparently us. That's what GBC World TV is all about. Authentically and transparently me. I am your host, Dr. Gino Bradley, and this has been episode 3. That wraps episode 3 of GBC World TV of our coverage. That was our coverage of the tax reform law. Now, don't forget, always check out the website because we're going to post all of this information where you can read it and take your time. And you can just look at it on your smartphone. Our website is brand new. The mobile app is brand new. It's going to be awesome. www.gbcworld.net. You can get our mobile app out of the Apple Play Store or the Apple App Store or out of the Google App Store. Or you can download our mobile app right from our website. You can go to www.gbcworld.net and click on the button that says download our mobile app, and you can download it right there to your phone. We have a ton of different technology, and we are so proud, so happy, so grateful for the opportunity to serve you. We want to say Merry Christmas, Happy New Year to all of our clients, all of our future clients, and all of our business partners out there that we have worked with. It's been an awesome year. Thank you for 14 years of excellence. And always remember, you can get us at 404 358-0718. All right, this has been episode 3, GBC World TV.